answer your question.
Welcome. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Hi, I'm Agam Vakil, and here are the top headlines for this hour. The Nifty 50 index moves back above the mark of 9,900, and the India VIX extends its losing streak to the sixth straight day. But open interest for Jubilant Foodworks surges as traders take fresh long positions following more brokerage upgrades. And of course, Future Retail and Shoppers Stop gain more than 2% after Futures announces its plan to buy Hypercity, and BASF India rises the most in over 2 years after MK initiates coverage with a buy rating.
All right, let's take a look as to how the markets are doing currently after yesterday's tepid session because of the Bank Nifty weekly options expiry. We did see some sort of profit booking coming into the markets, but very importantly, Agam also highlighted in the headlines, the India Volatility Index is now down almost 4%, telling you that in the near term, the volatility will be on the lower side. And as we speak, Nifty has crossed the 99.50 mark also there, and mind you, the most important mark which is important on the upside is the 99.72. That's your 20-day moving average on Nifty, so that's the first hurdle. Remember, yesterday Nifty took a U-turn from 99.45, not touching the 20-day moving average. So once that is crossed, probably you could see more upside coming in, and the 10,000 obviously will be the next level to be watched out on Nifty. In terms of open interest concentration, the range is actually pretty much squeezed. It's 19,800 on the downside to about 10,000 on the upside. That's where maximum open interest concentration is as of now. Even in today's trading session, if you look at it, it's the 10,000 call strike, which has added almost 1.1 lakh shares. And on the put side, heavy writing has been seen for the strike like 9,900, which has added almost 6.5 lakh shares. And even the 9,800 put strike so far has seen addition of almost 2.5 lakh shares. Well, Bank Nifty too is doing pretty well after yesterday's Bank Nifty weekly options expiry, where it had a negative closing. Bank Nifty currently trading with gains of almost 0.5%, inching very closer to the 24,200 mark, and it's trading with a premium of almost 38 points. Let me quickly take you through how is the participant activity in the futures and options space is panning out right now. Yesterday, the FIs, they actually covered a little bit of their short positions on the index futures, and we've seen FIs adding more of longs in the last two trading sessions. They also unwound the calls which they had written. So clearly, it's a positive sign actually covering down the shorts which they had written. And overall, if you see the setup by the FIs, they're net long on index futures, but still they're clearly hedged on the option side. They bought more of calls and they bought more of puts, pardon me, and written more of calls. And interestingly, Agam, this is the highlight. We usually don't talk about the client activity here, right, which has almost 50% total exposure in the futures and options market. This is the first time where I've seen the client activity where majority of your retail participants and even the HNIs will be present. They are net short on the index futures. Right. So if you look at it, they're 48% long and 52% short on the index futures. And this is after just, 1 week of the new series. We've seen index also inching up, but interestingly, clients are net shorts on index futures. So let's see in the near term whether there is any sort of correction which comes or not.
Of course, predictably, two stocks that stand out in terms of the gains in open interest, of course. One is Jubilant Foodworks and the other one is GAIL. Both these counters are gaining well over 10% in terms of open interest today itself. So clearly fresh long positions being taken in both these counters. You also have a lot of activity in Tata Chemicals. This is a stock that's moved up today, and well, another 7.5% increase there, or 9% for that matter. ACC and Arvind among several others. In terms of unwinding, once again, because of the fact that there has been a lot of strength in the markets, we aren't looking at a substantial amount of, decline in open interest. Page Industries, Mahanagar Gas with a little over 1% unwinding, but Pidilite, NIT and Cholamandalam hardly any. But that brings me to one stock, that's GAIL. It's moved up substantially. It's moved up as much as 10% over the last 5 sessions. Its open interest has moved up by 60% in the last 5 sessions. So there has been a lot of accumulation. Are we going to see some amount of booking? Well, we don't know and we can't predict that yet. But for now, there has been a very, very strong move on the back of volumes. And as you can see there as well in the price chart for GAIL, 22% gains in the last 3 months on a 1-year basis, a good 43% increase there as well. But, you know, the other counter that we were talking about, and Navneet and I were discussing before the show began, was Jubilant FoodWorks. It's curious because we are looking at a lot of upgrades, but we were a little skeptical on whether or not they will see the same store sales growth that we have seen historically for Jubilant FoodWorks.
It's very unlikely because if you go by the historical data, Agam, the base is too high. And I remember when this decline in the same store sales growth started happening, it's also because of Dunkin' Donuts also came into the picture, which spoiled the financials. I don't know if Dunkin' Donuts is still making money for Jubilant FoodWorks. But what's surprising to me, the second quarter earnings are going to start, and we know there was a revival in the first quarter. Just before the earnings, you have brokerages like Morgan Stanley, Macquarie, in fact, yesterday upgraded, and also Goldman Sachs is turning bullish on the counter. Recently, I ordered a pizza from Domino's, a 10 inches pizza, which used to cost me about 630 to 640 rupees because of GST, which has gone up from 12% to 18%. That pizza now cost me about 730 to 750. I don't know how many middle-class families can actually afford a pizza from Domino's. Maybe the turnover will still remain the same if there is any sort of slowdown because of GST, which remains, because obviously the prices go up. But to say the same store sales growth will go up, that actually the numbers will reflect. But to me, it's little surprising that all these upgrades are coming just ahead of the second quarter earnings.
Well, I can tell you one thing, that a lot of these analysts are anticipating an increase in disposable income. That has not come to be yet. But whether or not that happens in the future, well, it's anyone's guess, Navneet.
Again, to counter that, Agam, with increase in GST, I'm paying more taxes on everything right now. So I don't know how my disposable income is going to go up or not. But let's see how the earnings pan out. So far, the stock's doing pretty good. It was up 5% yesterday. It's up today. Fresh longs have been seen on the future side. Open interest up nearly 16%. We'll discuss that in further details with our guest. Let's welcome our guest for the day. Hemant Tukral, Head of Derivatives Desk at Aditya Birla Money, is joining us. And also joining us on the show is Navneet of IIFL Wealth. Good morning, both of you. Thanks very much for joining us today on BloombergQuint. Hemant, coming to you first. We've conquered the 99.50 mark. The 20-day moving average stands at about 99.72, which I believe should be the first hurdle for Nifty. What's the range that you will be watching out today on the index?
See, I think, good morning. As you mentioned, basically we are now approaching the most stiff resistance zone, 10,000 call. And what we saw yesterday also, when market was trying to move up, we saw 10,000 call adding OI. So there was no unwinding in 10,000 call happening. So I think 10,030, 10,040 will be the zone where you will see a lot of resistance happening. Now, if you can manage to cross 10,000, then we should head towards 10,200, because that will lead to a big short covering. Can we cross 10,000? Indications have started to come in. As you and Agam were mentioning about VIX, I think VIX is now stabilizing below 12. It's a very welcome sign for bulls. We have been discussing this. Second, the put writers at least are confident and they are shifting the base upwards. So we are seeing it to at least trying to conquer 9,900. So that's another good sign. And third for me, which is encouraging, is that Bank Nifty is trying to attempt to move at least towards 24,400. Bank Nifty has to cross 24,500. Otherwise, we will be again struggling at 10,000. So I think that is a more crucial level. But definitely VIX and at least puts writers are indicating that strength is coming back.
Well, there you have it. That's the call from Hemant. But Navneet, good morning to you as well. You were expecting consolidation on the Nifty?
But the greater chances of consolidation is still here. Look, if you look out broadly, we have got a double bottom at 9,700 zone, and at the same time on the higher side we got a stiff overhead resistance of 10,100 levels. So we are stuck with the 400 points band, and we are just almost near to the middle of that band of somewhere near to 9,900 zone. And today we have seen a good spurt. But today's activity is giving me also in confidence that an attempt towards 10,000, breaking about 10,000 levels would be there, because it's been a global supportive global markets, as well as there has been aggressive put writing happening on the lower end of 99 and 9800 levels. So which is giving confidence that the bulls are likely to defend these levels on the lower side, and we might make an attempt to about 10,000 level, which can push a bit of more of a short covering, because FIs are basically a net short sellers in the market on the index futures for the last couple of months. So there can be a trigger on the higher side if we started to make attempt about 10,000 levels. So I'd still play for a consolidation, waiting for a 10,000 levels to cross above. If that happens, one might see a bit of a more short covering bounce happening.
All right, that's the view coming in on Nifty, and as Navneet was talking about FIs, well, they're clearly net long on the index futures, but in the past few sessions that number has been changing. They started the series with almost 56% being long on index futures. Let's shift our focus and talk about the options strategies now. Let's go across to options corner, what we call it at BloombergQuint. But before we go to our guest, Navneet Daga has a short straddle on Nifty Bank. Let's first take a look at what a short straddle actually means. A short straddle is when one sells at the money calls and puts in anticipation of decrease in volatility, which we are witnessing today. When volatility decreases followed by contraction in option premium, the strategy becomes profitable. Navneet, over to you. Could you take us through your strategy now?
Well, look, as I mentioned in my view, that I'm still playing for a more of a consolidation, and Bank Nifty is looking likely that it will face a lot of hurdle on the higher side at 24,200 to 24,400 range. So I'm basically selling in at the money options of 24,100 for this weekly expiry. I'm pocketing a premium somewhere in the range of 290 to 300 points at this point of time. And I expect that the markets are likely to be in that range, and on the banks, just because we have seen some kind of a big breakdown happening in the private banks in the space, like of ICICI Bank and HDFC Bank also being a heavyweight. It's been a bigger dragger in the Bank Nifty. So I don't expect any meaningful reversal at this point of time on the private banking space. It's looking likely the more of a consolidation and Bank Nifty will continue. And selling in at the money options would give me a good amount of theta value. With also a decrease in the volatility would mean that the Vega gains would also be there. So my strategy will have a keep a strict stop loss on the higher side of a premium outflow of premium inflow. At this point of time is 300. I'll keep a stop loss at 375 on the spread, and play for a downside target of 100 to 140 rupees.
Hemant, a couple of days ago, I remember that you were expecting the Nifty to move above the mark of 9,900. It has done so, I think, and please correct me if I'm wrong, back then you had recommended buying the 9,900 call. This time again, you are recommending to buy a higher strike call. Can you take us through that?
Yes, Agam, last time we recommended to buy 99 call, but today we are buying 99.50 call. And the reasons are primarily same. We, as I said, put writers gaining confidence. At that time they were 98. Now they are getting placed at 99, and VIX is a very big factor for me. And the way it's dropping, I feel we should at least test towards 10,000, 10,030 level. So what I'm recommending is to buy 9950 call around 87, 88. You can keep a stop loss on both sides, 65 rupees as premium, or 98.80 on the Nifty, or the other way around is on the target side also you can keep a target of 120, 122, or Nifty testing 10,000. So the idea is that you can follow the levels of Nifty or the options premium, but this is the stop loss and target that I feel. So 9950 call should be bought.
All right, a bullish call coming on Nifty by the 99.50 call strike, which currently the premium is quoting at about 106 rupees there, as the Nifty has already crossed that mark 99.50. Therefore, the premium has increased today by 30 points there. Well, before we address a couple of our viewer queries, I want to first take a look at some stock futures which are buzzing in today's trading session. And Agam and I were discussing Jubilant Foodwork, a counter which went up yesterday on account of some upgrades coming about. And today again, there are two foreign brokerages who have upgraded the counter. Look at that stock. It's up 4%, open open interest is up 17%, clearly telling you that the fresh long build-up that one saw yesterday is continuing in today's trading session. Even the October futures are trading with the premium of almost 4 rupees. Heyman, at current levels, would you recommend any kind of strategy on Jubilant FoodWorks? Or let's say if somebody had taken a long position, do they look to cover at current levels, or you see further upside?
See, first of all, I think the momentum will continue. We are seeing further open interest addition. Yes, people who must have bought yesterday will try to sell at higher levels. But for me, if you have holding long or you wanted to fresh long, I see a target of 1585. So if you have already long, please revise the stop loss to 1516. At the same time, if you are entering long currently, 1516 should be the stop loss. But I do see this momentum carrying on to at least 1585.
Okay, so we have a live query coming in, and this one is from Anay Joshi, and he asks whether or not he should hold on to his futures of Hero MotoCorp, which he has bought at 3800. Navneet, I'm going to come to you on this one. Currently, he is sitting at a 50-point loss, considering Hero MotoCorp is going at around 3750. What should Anay do?
Well, I would say that there's a fair chances that it might get an exit price of a risk cost price, and I would suggest him to just hang on to that trade and place a stop loss on the lower side of somewhere near 3700 on the futures level. To my understanding, the stock is passing through a phase of consolidation, and it might chances that on the lower side we might see a kind of a bottom formation in the range of 3680 to 3700 zone. So if that level has been held up, it might get a bounce back towards 3850 level. That's where one should look to exit. But I don't find any major strength in the counter above that level.
All right, and I hope you're watching our show. Navneet recommends to hold on to your position on Hero MotoCorp, but put a stop loss at around 3700. The stock is going through some sort of consolidation, and Navneet feels that it could bounce to levels of about 3800 to about 3850. Well, let's also take some other queries which we are getting. We've got a caller coming in. Nikita Girnara is calling us from Kolkata. Hi, Nikita. Tell us what's your query on.
So I bought 9900 call at 75 during the start of the series. So is it advisable to take position?
Right, so Nikita seems to be very much in the money. She's bought 9900 call at the start of the series at a price of 75, and that premium is almost at about 140 rupees. Heyman, considering you do have a buy call on the 9950 strike, do you think Nikita should hold on? She can get better levels here?
Yeah, definitely I feel that she should hold on to her positions. And as we ourselves are recommending 9950 call, so I would also like her to keep a trailing stop loss because she is making money. And I think now she can keep a trailing stop loss at 9920 at the Nifty spot levels. So if it continues to hold, I think the next level, what we have mentioned as 10,000, she should see at least another jump of 40 to 50 rupees she can see in her premium. So I think she should continue to hold, but do keep a trailing stop loss of 9920 because she's already in the money.
All right, so now it's time to move down to Futures and Options 101, because our next query on Facebook comes from Rashesh Parekh, who lives in San Francisco. So we now have queries from San Francisco too, Navneet. People across in America are also watching us. So there are two questions that he wants to know. First one is, what is a premium or a discount? And the second one is, what is the concept of open interest? So let me start off with how or what is the concept of the premium or a discount. And to tell you about it, firstly, thank you, Rashesh, for writing to us. The answer to your query is that when futures price is higher than the spot, the difference is the premium, or when the futures price is lower than the difference, then that is the discount. For example, if the Nifty futures are trading at, say, 99.50 and the spot is at 99.35, this means that the Nifty futures are trading at a premium of 15 points. On the other hand, a premium and discount in derivatives terminology is also called a contango or backwardation, but that's too theoretical and we really don't use those terms anymore.
Use those terms in the commodities market, is that what I was reading? But yes, in in the derivatives terminology, you do refer premium to contango and discount to backwardation.
Right.
But let's also address his open interest query. Let's explain what open interest is. It's actually a number that tells you how many futures or options contract are currently outstanding or they're open in the market. Well, open interest increases when new contracts are added into the system, and it decreases when the existing contracts are actually squared off. Let me give you an example here. If X takes a long position and Y takes a short position in the similar underlying in the future space, let's say if that's Nifty, the open interest will be 1 and not 2, which usually most of the people confuse it to. For every buyer, there's a seller in the market. Therefore, if somebody takes a long position and the other person takes a short position, the open interest is 1 and not 1 plus 1, 2. Well, that's your explanation on open interest and premium or discount, Rashesh. Thanks very much for writing to us. Well, on that note, our live viewers, you can also write to us on Twitter, Facebook, or you can just call us on 022-4540-411 with all your F&O queries, and we'll try and address as many as possible queries on the show. But just remember to add that AskPQ hashtag. Well, Agam, we should go to trading strategies again.
Absolutely. So before we do wrap up this show, I am going to go to our experts to ask them, give us maybe some cues with respect to what they're tracking. So Hemant, I'm going to come to you first. What are you trading in, or what are you advising your clients to do today, or so, for example, next 2-3 days?
See, Agam, I'm recommending two stocks, but both are from the commodity side. One is metals and one is cement. So I would like to buy Vedanta. I see a huge buying interest coming back in metal stocks across the board. So, but Vedanta I'm just choosing because the way the open interest is adding up. So I would like to keep a stop loss of 320 and a target of 334 here. The second is cement stocks, where I am also seeing a lot of buying coming in. You also mentioned ACC. However, the call target I think is already met. It's at 1740, but we can still revise it. So I would say continue to buy ACC, or you can make a fresh long. But now the stop loss should be 1715 and target should be 1765.
Okay, so that's Hemant's calls coming in, but we have another live query, and this one is from Dhyanesh Jejurkar, and he wants to know what he can do with the futures of MRF. He holds one lot of MRF at 64,000, and he'd like to know the kind of levels that he can keep an eye on. Navneet, if I can come to you on this one, what can he do with MRF right now?
Well, look, the entire tire stocks has seen as a good amount of supply on the higher side, and continue to believe that the stocks are creating fresh lower lows, and the chances that it might drag a bit more low from here on is quite high. So at this point of time, since it's just near the money, where the client has made the positions. So to my understanding, it's better off to square off this position at the current levels and somewhere near to 63,500 levels only, and wait for a better chances to wait for the better levels on the lower side, somewhere near to below 6,300 levels, 63,000 levels to enter into these positions. So risk rewards are not favorable to be on the long side at this point of time.
All right, Dhyanesh, that's the view coming in on MRF. Well, Navneet suggests that you should exit your position. I know you're making some bit of losses there, but as per what Navneet is suggesting, you can look to re-enter into this counter once it slips to those levels of 63,000. Well, MRF is currently quoting at levels of, the futures are at 63,600 with a premium of almost 180 rupees. Navneet, over to you for your strategies now. What are the trading strategies that you would like to share with our viewers?
Well, one stock has already been discussed by him and by it's VDL. To my understanding, the commodity stocks are likely to see some more buying momentum in the near term. So I'm buying VDL with a stop loss on the lower side of somewhere near to 318 levels, and playing for the target of 335 on the higher side. The second stock that I've got a long position, it would be a kind of a big of positional buy. It would be the stock likes of Tata Chemicals. It's seen a big breakout with a huge volumes and open interest build up. And to my understanding, it's looking likely that this stock might head towards somewhere in the levels of 720 to 730 on the near term. So I'll still chase the momentum on the higher side and place my stop loss on the lower side as somewhere near to 665 and trade for the long on the long side.
I know we're running out of time here. Just want to take one more live query. Our viewer has written to us on Facebook, and that's Anil Salaria. He wants a view on Tata Motors. He's not mentioned whether he's taken any position or not. He just wants the view maybe on the charts. Heyman, would you recommend taking any position on Tata Motors?
See, I'll put it this way: the Tata Motors is at least forming a base above 400, which is very encouraging for me. Because every time the stock has gone above 400, it has started seeing some selling pressure. Yes, it is not been participating in today's rally for some sales numbers that have come, but I would still feel that the stock is in a bullish zone. So I would recommend to buy, but I would keep a tighter stop loss now, and the stop loss should be 416. If it continues to hold that above that, technically looks good to go up to at least 435. So it's in a bullish orbit, even though it's not participating. So keep a stop loss of 416.
Okay, time to move on and get a small slice of our conversation at the India Economic Summit. The GST hurdle is over, and Nestle is now looking at tapping into the under-penetrated markets in rural India. Speaking to Sajit Mangat, the company's chairman and MD Suresh Narayanan says demand scenario has been largely stable. Let's listen in.
The demand situation has been fairly stable now. I think we took and many FMCG companies reported this, that they had a blip during June, just before the GST, because of the postponement of wholesale purchases and therefore the lack of a stocking impact that usually happens at the end of the first half of the year. I think July was a little bit, initially a bit bumpy because people were adjusting into the largest fiscal change that the country has seen.
What we are hearing on the ground is that there has been a distributor consolidation, which is also happening because now you don't have multiple states, so no VATs in multiple states which are not there, and it's easier to transport goods from one state to another. So there's a consolidation of distribution happening as well. Is that impacting you in some way?
Honestly speaking, I think we have not seen any such behavior as a company. However, the full benefits of GST, which is something that I had once referred to and which is fairly common knowledge, is the fact that it will unleash economies of logistics and distribution. And I think that whole exercise of recalibrating the number of distribution centers that we would need to have as a company now, based more on location, centers of consumption, and the cheapest freight routes to the locations that we're talking about. That's an exercise that is now being undertaken, and that's ongoing. And I hope that there will be some benefits coming out of that.
But when do you see that benefits coming in? Is there a timeline for it? Because you've been preparing it for the last 6 months, right?
Sure. Look, I think what happens is, we have almost close to 40 distribution centers across the country. So, and this is all set up because of the earlier central sales tax regimes. But I think what we are doing is we are really accelerating this project to see how quickly we can implement it, because every time I consolidate in one and I close another, it is 2 shifts, right? So if I'm talking about almost 40 distribution centers, it's a number of shifts that are taking place. So we are trying to see how we can calibrate these shifts without making a serious impact on the business.
How are you seeing the rural demand picking up? The spends are not as much as it used to be.
So, look, I think firstly, I think I would just like to add that the rural footprint of Nestle is relatively lower as compared to many of my consumer good colleagues. So if you were to look at a Hindustan Lever or a Colgate, their rural footprint is much stronger and much more pervasive than what I have as a company. We are largely a semi-urban, urban-oriented company. So to that extent, I think rural demand, while I know that at the moment there are reports that it is yet to pick up, I do hope that as a consequence of the monsoons and as a consequence of the overall growth that we can expect, should start to pick up. As far as Nestle is concerned, my focus is really more on the urban markets, on the urban middle class, and the journey that they are going on. and that I must say has been fairly even and has been fairly satisfactory.
All right, that was the management of Nestle India talking about the demand environment in India. We'd like to thank both our guests, Navneet as well as Heyman. Appreciate both of you joining today on BloombergQuint and helping us with your view in the futures and options market, and also helping our viewers with their queries.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks for watching. Up next is Hot Money with Darshan Mehta. Stay tuned in.